On Hong Kong's stock exchange, shares of a troubled Chinese property developer plunged more than 70% on Monday after returning from a 17-month trading suspension. Now, investors closely watching Evergrande because the key role it played in China's real estate crisis. For years, the company was one of China's largest property developers, but it defaulted on its debt in 2021 after borrowing too heavily to fund its multi-billion-dollar expansion. Let's bring in William Lee, who's chief economist with the Milken Institute, joining me from Los Angeles. Just explain to our audience, if you will, China's property market, its overall health, and how big an impact it has on Chinese growth.
The property market in China has been a ticking time bomb for quite a while now. China's having all sorts of troubles coming out of the post-COVID lockdown, and its economy is really not doing well. And now this explosion in the property market, where essentially this turmoil of these many developers going bust, including Evergrande and Country Garden, is important because 80% of Chinese households have their wealth in their property, in their houses and in their apartments. And so when you have this kind of turmoil, people become incredibly nervous about what's happening with their wealth. And then on top of that, when you have 20% unemployment rate for youth unemployment, their family income is down. So here's China trying to boost its economy, get growth back online again, and no one wants to spend because of all this uncertainty.
Yeah, this property market playing an outsized role in China's economic health. China was, of course, the big economic miracle over the last 30 years, particularly after its entry into the WTO at the beginning of the 2000s. What does the global economy look like with what, frankly, at present looks like a sort of stagnant China?
Well, China became the source of everything that you needed for consumer durables, for electronics, even low-cost T-shirts at Walmart. And so as China became concentrated as the global supplier, if the Chinese economy is not able to revive by exporting more because the rest of the world has changed its pattern of consumption. People are now consuming fewer goods and more services. They're going on vacations more. And China's own economy is in doldrums because people within China are not willing to spend because of all this uncertainty with their wealth and their income. The world is going to change because China is no longer an engine of growth in the world. And that is what the global economy is trying to get used to. And the fact that globalization has shifted the supply chains out of China into the rest of Asia has made China into a question mark in terms of investors. Everyone is asking, is China still investable? Should we be putting our money there? And more often you find the answer is maybe not.
Yeah, interesting. Very briefly, Xi's protectionist policies are being blamed, at least in part, for the faltering economy. Are his critics correct to blame him for that?
His policies in some ways are just the tip of the iceberg because Xi Jinping's strategy is to convert China into a 21st century giant in terms of high value added production. He's willing to give up on a lot of the low value added stuff leaving China if he can preserve quantum computing and advanced semiconductors. Trouble is, a lot of the trade restrictions are hurting that strategy, and China is not able to pull off the kind of revival that's hoping to.
Yeah, it's fascinating. Good to have you, sir. We'll have you back. Thank you.
Thanks for having me.